Alright, let's tackle the big question. Will the 2025 housing market crash or boom? If you've been watching the headlines lately, you've probably seen words like correction, collapse, and crisis thrown around. But here's what's actually happening on the ground right now. Nationwide, the market's shifting, fast. Inventory, meaning the number of homes for sale, is up about 15% compared to last year. That sounds dramatic, but let's keep it real. We're still below pre-pandemic levels. There are just under 1.5 million homes on the market, versus 2 million back in 2015. So, while listings are rising, we're not drowning in supply yet. Now some regions are feeling this more than others. The Midwest and Northeast are seeing new listings jump. Think places like Cleveland, Milwaukee, Boston. Meanwhile, the Sun Belt and West, cities like Tampa and San Diego, are actually seeing fewer new listings and bigger price declines. So what about buyers? Mortgage rates are still hovering near 6.7%, which is way higher than a few years ago. But here's the surprise. Buyer demand is staging a comeback. Mortgage applications for purchases have risen 22 weeks in a row, and buyers are getting used to this new normal. Still, home prices are only up about 1.4% year over year, and that's actually less than inflation. In other words, the pace of price growth is slowing down. In some places, Detroit, NYC, and Cleveland, prices are still climbing. But in others, like Oakland, Tampa, and West Palm Beach, prices are falling. And about 1 in 3 homes in Florida has had a price cut recently. Sales volume is another story. The number of homes actually selling is stuck at around 4 million a year, way below the pandemic peak. That means homes are sitting longer and sellers have lost their upper hand. We've officially tipped into a buyer's market in many areas. Buyers are negotiating, often getting homes below list price with concessions or even upgrades thrown in. But does all this mean a crash is coming? I don't think so. Here's why. A true crash needs 2 things: falling prices and a wave of forced sales or foreclosures. Right now, foreclosures are at record lows. Less than 1 in 200 mortgages is delinquent, way under 2008 crisis levels. Most sellers aren't desperate, and stricter lending standards mean homeowners have real equity this time around. So, what does this mean for you? If you're buying, you finally have room to negotiate. Focus on well-kept homes in strong neighborhoods. Be extra careful in markets with lots of new construction or weak job growth. And don't let high rates scare you. If you find a good deal, you can always refinance later if rates drop. If you're waiting for a 2008-style crash, it's probably not coming unless the job market takes a sudden hit. Instead, expect a slow correction. Prices softening in overbuilt states, steady or even rising in others. Bottom line, the 2025 market is all about local trends and smart negotiation. Don't rush, do your homework, and remember, the best move is the one that fits your long-term goals. Want more updates and real-time insights? Hit subscribe, and I'll keep you posted every week as this market keeps moving.